Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that the test below yesterday's low ended up attracting responsive buyers and pushing the market back into the recent short-term range. And heading into the open, if ES can hold above the 88 quarter pre-market support and 84 to 86 initial support, the buy side can still maintain control. And from here, we can still get a retest of some of those upper resistance areas. 2000, 2002, yesterday's high, and the 06 to 07 half are all zones that have potential to get tested in the event of the market holding the initial support zone, pre-market support. 1991 is a good reference level to keep an eye on. It's the high volume node of the current balance. So on the upside, a break above pre-market resistance, 93 to 94 half, would be a signal that buyers are now gaining control. From there, we can test 2000, 2002, and a breakout above 2000, 2002 could accelerate the upside for a test of yesterday's high at 04 half and 06 to 07 half. And then if there is enough volume and momentum in the market and broad market strength, then potentially we can even go higher and test the 1175 to 14 quarter zone. So right now the market short term is in a balance, but we could see some directional movement come into the market today on the smaller time frames and test some of those upper areas. On the downside, a break below 84 to 86 would signal short-term weakness, bring the overnight low into play, as well as the 74.75 to 76.75 support zone, and possibly the 66 quarter to 69 quarter support area. Now, the zone at 74.75 to 76.75 still calls for caution. Responsive buyers can be active there, but we'll have to see the underlying environment to see whether we're seeing liquidation type environment or whether it's still more or less balanced, in which case buyers can be active. The 66 quarter to 69 quarter is a more important zone, and even if the market probes below 66 quarter, responsive buyers can still defend and be active here. So this is an area where we can get a more aggressive buy response, even if the market probes a little bit below it. We have low volume nodes at 64.75 and 62 quarter. So even if we probe a little bit below it, technically the buy side can still step in, and then we can balance within a range and go back up towards the 76.77 area and potentially higher. So that would be the downside scenario. Overall, the market is still technically in this larger balance breakout. Nasdaq was showing a little bit of weakness overnight, but we're seeing a little bit of recovery there too. TF is holding up well, so by default we are still going to give more edge to buyers above initial support and above pre-market support, and we'll have to be a little more careful and cautious on the short side. So we need to see some real signs of weakness in order to short the market. And if we are going to take any intraday shorts, they have to be at very good location. And on the upside, like I said, there is still potential for directional movement, and we may not get much of a reaction until perhaps 06 to 07 half and maybe even higher. So right now the buyers are still more dominant and in control, so we are leaning more bullish above initial support, above pre-market support. So the short-term bias is neutral bullish. The bigger picture bias continues to be relatively neutral. So those are the main ideas heading into the open. Let's see how the market reacts at the 1991 high volume node, pre-market support, pre-market resistance. That'll really help set the tone for the day, and we'll take it from there.